Hey traders, John Howell here. In today's video, I'm going to be walking you through the indices. I'm really excited about this market right now, guys. A lot of people have been saying the stock market crash. A lot of people have been saying, the Buffett indicator is overvalued and and the GDP and the numbers and but what's really going on in these markets and what's really happening right now when it comes to you and your trading decisions moving forward. Also, be looking at silver and gold as well too, GDXJ, those sort of markets as well too, and what I'm seeing. I think you're going to really enjoy that. Also, guys, I'm going to be walking you through four different stocks that I've been doing my analysis for the last few hours, and four different stocks that I think look quite nice for a nice move to come. So we've got a lot of stuff we're going to cover in today's video. Sit back, get your popcorn, let's get ready. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty guys, let's get straight into it right now. And you know the drill, guys. If you like this video, give me a thumbs up. And if you enjoy these types of analysis videos, give me awesome in the chat box below or in the comment section below. That way I know you enjoy these sort of analysis videos as well. Let's get into the indices first. And the first thing I want to cover is the Dow Jones. And I want to share this with you and what I'm seeing here right now. One of the really bad mistakes that a lot of traders do is every single time we get a little bit of a pullback or a little bit of a dip, one of the worst things that most people do is they freak out. They say, this is it, this is the top. Any little pullback in the market, they freak out. So for example, I'm in a trade right now. Actually, me and some of my private clients in a trade right now. We got in one day and the very next day, it really didn't do much, but it gave an ugly candle and he was freaking out. He was like, oh my goodness, it's such an ugly candle. Did you get out? Oh my goodness. And he was freaking out about one single day. The really important things to understanding these markets is just to go with the markets until the markets start to tell you that things are changing. And if you look at these four charts here, to the right charts, I've got the weekly charts here, and to the left, I've got the daily charts. Once you start to combine them together, you can start to really get a good, really good sort of view. The daily charts give me a good sort of close-up view, what's happening right now. And the weekly chart gives me that forest from the tree type look. And when you can start to combine those together, it's truly one of the most powerful things you can do to making good decisions in the markets. So if I look at my chart down the bottom here, let me just blow this chart up here. As you can see, there's been so many people that we get a little run up. And look at this here, right? We just go sideways. Oh, that's it. Oh my goodness, there's a head and shoulder formation. Look at the head and shoulder formation and we're breaking down. That's it, it's all over. The crash is going to continue down and the market runs up. And then look, boom, drop down. Oh, that's it. Oh my goodness, this is one of those patent sticky thingy majiggies. That looks really ugly. That looks bearish. That's it. It's all over. And we go for a run. And then we get a little pullback. Oh, that's it. It's all over. That's it. It's happening. The crash has started. Get out of the way. Get into cryptos or get into stocks or get into silver and gold. Protect your money. That's it. It's all over, guys. And the market runs on. So if we can sit back and have a look at this market from a not a one day perspective, but from a whole perspective. That's one of the most powerful things I can try to invade or try to convey. Is that the word, invade or convey? I think I got the convey right. The convey language right. This guy didn't finish school. And so if I'm trying to convey something with you, the worst thing that we can do is look at one sort of red bar or red candle. If you do have candle starts, if you do have candle charts, and looking at a candle perspective instead of an overall perspective to see what's really happening. And the fact of the matter is one simple analysis you can do to stay calm, and that the trend is your friend until the end. And what is that? One simple analysis is all about just saying, okay, look, higher low, higher low, higher low, another higher low, another higher low, and another higher low. So as you can see that the market is going up. The trend is your friend until the end. Now, one of the worst things we can do is start to say, oh, this is definitely the top and it's going to break down. That could happen. And obviously we need to be watching for that. But the thing is that don't try to pick a top or don't try to pick a bottom, because if we do get a pullback, what's to say it's going to be the end and then continue up? You know what, guys? I'd rather trade with the trend and be right 8 times out of 10 and do well trading with the trend instead of picking tops and be right 2 times out of 10. Oh my goodness. You see what I'm saying there, guys? Because trading is all about probability, isn't it? There's no certainties within a trade, but it's like, how do I stack my odds on my side even more about this? What's really going on with these charts? And that's where I strongly recommend bringing your charts back to just a simple white background with the black bars, because forget the red bars and the up bars. We're trying to see the flow of the market. And as you can see, when the market is stepping higher, we see a really nice upward trend, and the trend is your friend until the end. Is the end here? No, wait. We're right at all-time new highs. The trend is your friend still. So don't, be nice to your friend, okay? Your friend is telling you what's going on. Listen to him. So we can see that's what's happening with the Dow Jones. And if I'm looking at the Dow Jones right now, then let me actually bring it back to this point of view here. If I look at the Dow Jones and I'm looking at my sort of bottom right-hand chart here, what I can see is we're almost at this all-time new high. I would not be too surprised to see even if this does go sideways, then this probably has a really good chance or a really high probability of breaking up to all-time new high and going for a run. Now, the mistake that a lot of people do is they try to make a trading decision. I'm going to get in today and I'm going to get out tomorrow or the next day or a short time frame or a few days or maybe even for a few weeks. They look at a report such as the Buffett indicator, and then they say the Buffett indicator is so overvalued, it's calling crash right now. They look at that, which may be signaling now in the next few months a crash, or technical really terms is a pullback in the markets. It may be signaling, but that may not kick in or that may not happen until 3 months from now, 6 months from now. Makes sense? So if you're making a trading decisions, meaning you're trading in, out, and short term, then why are you spending your time looking at fundamental research, but then you but then you get in and you get out really, really quickly? Fundamental macro research, which Ray Dalio stuff is the best, in my point of view. Please don't mix them up, because now you're doing yourself a dissatisfaction. You're looking at a report, even on the crypto market. You're looking at a white paper or report, say this is the greatest thing out there, and look at all this technology, blah, blah, blah. And then you get in today, and the next week it doesn't go up. It actually goes down a little bit. You're now freaking out, I thought this was the best thing in the world. Why is this thing going down for? See how that's totally incongruent. The markets go up and down. They go in flows and trend analysis and so on and so forth. So for me, looking at the Dow Jones and looking at the S&P 500, look at the S&P 500, we're almost at all-time new highs, breaking up to all-time new highs, and same for the Nasdaq as well too. Now, I know this might sound crazy because everything that's been happening around the world, but these charts are king and they do tell you what's going on. And the only thing we do have, guys, is the charts. If you're a trader of these markets, or even if you're an investor long-term, the only thing we can really do is say, okay, what's this market, the collective wisdom of the market telling us, which simply means looking at trend analysis and what's happening right now. We had a dip, higher low, trend is your friend until the end, rallied up, made almost a double top, and now we're getting a little bit of a pullback. Oh, it's a double top, that's it, crash is going to happen. Please remember, guys, too, that when we talk about crash, even in the whole coronavirus situation, look at that. That took about 4 or 5 weeks to happen. It wasn't one day or 1 week. Right, guys? So please don't be afraid of a crash. Now, I'm going to flip it on its head and talk about the investing side. If there is a significant pullback in the markets, that the word crash, or the word, if you look at again, I come back to that word crash, right? Because the word crash is, oh my goodness, the market's going to crash, and then tomorrow, oh, I thought the market's going to crash today. But do you even understand how the markets work? Like a crash, like 2008 stock market crash was 2008. That was over 12 months, 365 days, longer it took for that entire quote unquote crash to happen. So if you're hoping for a big, massive down move, then why are you doing that? Let's actually bring it back to say, okay, you can't ignore, you can ignore reality, but you can't ignore the consequences of ignoring reality. And the consequences, and I've done this in the past, is thinking something, but the reality is that's not the way things work. AKA, if the market is going to see a significant pullback in the markets, we're going to see the market start to top out a little bit. It's going to start to break previous lows. The trend won't be your friend anymore because we won't be going up anymore, won't be trending anymore. And all these things will start to kick into play. So if the Nasdaq is going to head back down to 7,000, well, yeah, we're going to start to see maybe a lower high. We're going to break past these significant lows all through here. I'm just looking at this chart down the bottom here, and so on and so forth. Makes sense? And so I hope that if you're listening to these other reports out there, which again, I'm not, there's nothing wrong listening to them, like a Greg Mannarino or a Peter Schiff, these reports, but then you go to the market and you say, I'm going to buy gold right now, and gold has a bit of a pullback for 2 or 3 days, and you freak out. It's like, no, long-term trends happen with runs and swings and pullbacks. We must understand that. And so if you're looking for a good opportunity to get into, say, gold or silver or something that you enjoy, well, you're better off waiting for a quote-unquote, good pullback or good crash, right? That's the best time to be entering in the markets. And, what we're getting right now with the mining stocks and silver and gold. And hint, and so that's the way that it's so important when we're looking at, once again, with all these reports out there we listen to, guys. It's actually not doing you, it's not doing you any good as a trader. Okay, now investor is a different term. Investor is, I'm going to buy this, and the investor is, I'm going to buy some of this right now, and over time I'm going to accumulate more and more and more. That's what an investor does, right? Investor says, okay, now, and if the market has a really big pullback in any stock that is a good stock, or silver, gold, or any of the indices, or anything you like as an investment, meaning over the next 2 to say 3, 4, 5 years, then with that you say, okay, an investing approach is, I'm going to put in 25% of my capital right now, or 10% of my capital right now. And if we do get a really big pullback, well, then I'm going to put in another 10%, and then I'm going to put in another 10%. See what I'm saying there? That's an investing, that's an investing mentality. You don't just throw it all in one go, and then hope for the best. Because as you know, we are going to see corrections, we're going to see pullbacks, but most of the time, like probably 9 times out of 10, those corrections are going to see all-time new highs. And no doubt, with everything that's still happening right now, like the stock market, we're probably going to break up to another all-time new high, even the Nasdaq. And so please don't sort of filter these things through. Please make sure that if you're just purely trading the markets, meaning you're trading for an income, well, the only thing you should be looking at is just the charts, and not all these other things, all this other stuff that's going to sway you on different decisions. And the charts is basically pattern recognition. You get in on a pattern, there's a probability there. Some are going to lose, some are going to lose, some are going to win, and so on and so forth, right? Depending on what pattern or whatever you use for your trading decisions there. So I know I've gone on through there, guys, but I really see a big mistake that most traders are making right now. And it's like they're focusing so much on one day or even just 1 week in the big scheme of things. But when you really step back and look at from the forest, from the trees, and the weekly charts help you do that, you start to see some really, really, really good things happening. And that's like, for me, guys, I made a lot of money when the whole coronavirus situation happened and the market did crash. If you guys remember back in March, I was all over YouTube saying I'm going long big time here, and I bought the SPY, I bought JP Morgan, and I bought Apple as well too, with options, by the way. So Apple was an enormous profit, SPY nice profit, and JP Morgan was a small loss. But even out of all that, guess what? I made a lot of money purely because I understood that this was just a short-term thing, and we're probably likely to see a nice move back up, and I wasn't involved with all that. So let's move on now through to silver and gold. And silver right now, guys, really interesting. Looks like silver is developing a bear flag through here. And if I bring up this situation here, looks like we've got a bit of a downtrend, but looks like we're developing a bit of a bear flag, and this would be the flag. Even if we do get a bit of a drop to the downside, guys, I don't see it being much. Now, much means, you know, we could probably get down maybe 20 if we do see this bear flag, you know, eventuate. Now, there's a couple of different myths about bear flags, and that is, one, if you see a bear flag that looks like this, that means it's bearish in the markets. Wrong. Because there's been many a times you see this here, and then suddenly what happens, you get a breakout like that. What does that mean? Well, it's no longer bearish. It's actually probably going to run up to the all-time highs here. So just because you see a bear flag and the textbooks and all that garbage out there tells you, oh, a bear flag means it's bearish. No, it's not. That's total bollocks. Now, if we do start to see a breakout like that, something like that, now we're starting to see a bearish confirmation of the bearish flag. Just because it's a bear flag doesn't mean it's bearish for the markets until we get confirmation. Which way will it break? And so let's have a look through gold here for a minute. So gold's doing sort of the same thing as well too. The thing about gold is that we actually have a little bit of a breakdown. Same thing with silver, guys. You know, if we do get a little bit of a pullback here, it's probably going to be very, very short-lived as well. You know, I see some sort of support and resistance coming around. Yeah, it's probably short-lived. Now, if we do start to break up and we start to break above sort of the 1950 level, then it's going to be game on for the buyers, and probably an all-time new high is going to be hit as well too. And that's same for all the other. What I just said there, guys, are the exact same for the GDX and the GDXJ and all those sort of things as well too. So on a short-term basis, guys, even if we do get some form of a pullback here, like on the GDXJ, if we got a nice pullback, you know, to the 50 or even a 45. Well, guess what? That's probably going to be a very short-lived move, and then before you know it, you know, 6 months from now, we're above 70, and we're continuing this bull market, which we've just started when it comes to the mining stocks through there. So that's what I'm seeing when it comes to all of these markets out there and what's really going on right now. Now, let me share with you some good old stocks analysis here. So the first stock that I want to share with you is Coca-Cola. Now, Coca-Cola, guys, is something that is definitely looking really, really interesting. Let me actually blow this chart up through here. And I can see that we're let's actually all right, cool. Let's actually do that again. All right, erase. All right, let's go again. I probably just had that trend line on there. All right, so you can see we're having a bit of a trend line coming on through there, guys. Bit of a support level coming all the way up through there, and we've been compressing up into this sort of triangle pattern through here. So compressing up all through there. And if you can see what's happening here, we're compressing up into a really nice sort of the triangle pattern. If we start to break that, let me bring this back down to here. If we start to break this level, this sort of 52 level on Coca-Cola, well, we're probably going to make an all-time new high. And I'm telling you right now, guys, Coca-Cola is probably, especially what's happening right now, right? Everyone runs for Coca-Cola. So the Coca-Cola stock looks like it's compressing up into a triangle pattern. If we break about 52, we're probably going to race up to 60 and probably break up to an all-time new high. So Coca-Cola is looking actually quite strong from there. So that's the first stock off the rank that I'm watching very closely. Let's have a look now at good old Amazon. And looking at Amazon, Amazon's actually doing quite a unique pattern through here. So let me blow this up once again. One thing we're doing when it comes to Amazon, notice how Amazon did nothing for a long time. And if you've been watching my last few videos, when the market does nothing for a long time, what is that? Say it with me. It's what? The calm before the storm. This is the calm period. If you guys go back and watch my last few videos, you hear me talk about different markets that are doing this exact same pattern. It's so obvious. So the calm, or this is known as the energy building phase. And we go sideways, we're building energy, and when we start to break out, we're starting to release the energy, and then we go for a big move. It's so clearly obvious, right? But look what's happening right now. What's happening here? What is this? Another what? Another calming period, another energy building phase. So looking at Amazon, if I bring this back down to here, and if I look at Amazon from this perspective here from the charts, I can see that once again we're developing, and I'm just looking down the bottom here, guys. I'm just using this bottom chart here. Sometimes I can see the charts a lot better when they're squeezed up like this. If I blow it up like this, then for me personally, I'm like, okay, what's really going on? Or even worse, I'm looking at the stock like this for the last 3 months. When I'm trying to read the market or try to get a gauge of what's really going on, where's the energy building phases, where's the trend analysis, stuff like that. I'm always looking at this here. And once again, guys, you can see how we are starting to develop, once again, a sort of an energy building phase through here. So with Amazon, if we hold, we ran up, made a double top, and we're getting a little bit of a pullback here. If we start to, and actually let me just blow that up here for a minute. If we hold here and we start to break up, I wonder if there's a bit of a trend line. I just noticed there could be a bit of a trend line going on through there. That's not it. Is there something? Oh, there. That's actually. There we go. That's the trend line I'd use. So you can see this is the trend line I'd use. Only reason why I'd use this trend line, guys, because we've got a lot of bounces. You can see how it ran up, and now guess what this is? Squeezing up into a triangle pattern, right? If I actually take this off here, you can see how it's squeezing up into another triangle pattern. So if we do break above 3,500, we're probably likely to go for another few month run in stocks, or sorry, in Amazon. So Amazon's one of those stocks, guys, that could be getting ready to go for another move in the markets. Let's go have a look at Goldman Sachs here. Goldman Sachs is next off the rank. Now, Goldman Sachs, I am seeing, what is Goldman Sachs doing? Say it with me. It's been doing what? Nothing, right? We've got basically 220 is the high up there, and we have sort of 190 being down through there. Now, say it with me. What is this? This is the calm before the storm, or this is the energy building phase. And we've been in this energy building phase since June. So when we break out, we're now releasing that energy. And so just like Amazon, what's likely to happen is we're now likely to see a nice move. This is also known as price and time, guys. But I used energy building phases to help you guys out. Again, once again, guys, if I go back to Amazon here for a minute, let me just quickly recap that. When the market does nothing, it's energy building. When we start to break out, the longer it goes sideways where we break out, the longer we're likely to see a move. Now, again, likely, probably 8-9 times out of 10, you're going to see a big move, and maybe 2 or even 3 times out of 10 it doesn't. But if you're trading options, you can start to have a 7-8 times out again. You get the point there. So going back to the good old GS, Goldman Sachs, and if I blow this chart a bit more and squeeze it up, look what's been happening. Pretty much nothing. Even if I just bring it down to here a little bit more, pretty much nothing, okay? So let me bring it down to this chart here. So if we're looking at this chart here, I can see that overall, if we start to break up and out above 220, then on a short-term basis, we're probably likely to see at least a move up to around the probably 250, 260 level. From there, at least that through that level through there. So if I used a projection, and let me share this with you, whenever you see a channel, if the market has a pullback here and then we go for another, if the market has a little pullback here and then we start to break up and we don't pull back down to 190, if Goldman Sachs starts to see something like this, and then we hold, and then we break out like that, that's a very powerful sign. That little higher low is a very powerful sign. So if I'm looking at a projection point, what you do is when you see the channels in this section, you will raise up, you'll go to the high point, so the high of the channel. You will then go down to the bottom of this channel. You will then pull that to the upside, and then you'll say, okay, that's where it's likely to go to. It's a projected channel. Whenever you see a channel, you measure from the high to low, you project it up. And if it breaks to the upside, then we're likely to get to that 250 mark, which is this high here as well too. What a coincidence, right? You use a projected target, and it's at this previous high back in 2000, back in this year. Start of this year. So that's another market that I'm liking, guys. And also last off the rank, which is Netflix. Now, if I have a look at good old Netflix and I see what's been going on, Oh, what to say with me? It's nothing, right? 560 to 460. What is this? Nothing going on. What is this? This is the calm before the storm. This is what an energy building phase. It hasn't been going on. Not much going on. This is a triple top. Oh my goodness, triple topped on, so on and so forth. I'm telling you right now, guys, No, this is no guarantees of happening, right? If we hold, if we see that, then no, we haven't actually got the breakout yet. So if we're using this as an energy building phase, and if we don't break out, well, it's not releasing energy. We need to break out first to start to release this energy that's been building since July. Makes sense? So just like back here, look at this here. Sideways, energy building, market breaks out, energy releasing. So energy building, energy releasing. So what we're looking for is this not to have a deep pullback. We're looking for something just like this, and then get a nice little strong breakout bar above 560, really good dominant breakout bar, something like this here, something like that bar there, or even let's actually bring up a few bars. So something, see this strong bar here? That's what you want to see. See this little up, down, and then a big breakout bar. That's what you want to see here. That'll be very, 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 very strong to see a nice continuation move. And so if all goes to plan, or all the planets and everything line up, and that does happen, where is Netflix likely to go? Well, let's use the good old projected target again, and let's actually see where this is likely to be at. So if I move from the high, and if I go down to the low, and if I project this up like so, very, 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 very simple. And then we have a good old 650 target on Netflix. So if I bring it back down to here, I can now see, looking at this projected here, that if we start to see that, there's a very high probability chance if we start to break 550 based on what I've just said there and that pattern, which is a small higher low and a nice little strong breakout bar, especially with a lot of volume, there's a high probability we're going to get the 650 and beyond. So hope you enjoyed this video, guys. There's a really good video there. Let me know what stocks you actually like. Is there any stocks you like? Anything you like there? Make sure you click on some of the videos around here that you see on the page as well too. Subscribe, like, and leave a comment. Let me know what you think.